The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. This is the 11 o'clock to 12 o'clock show, and it's my pleasure to be here Monday through Friday on market days. Hey, very interesting. Dow's up 166 at 17,682. Had a low yesterday that didn't take out the low of the previous day of Tuesday at 17,465. But having once taken out 17,500 support, it's a hint of things to come. We'll have to see how this, I'm calling it a counter trend rally, how it unfolds. Now, I didn't talk about this when I did Tom's show just a moment ago, but I'll talk about it now. In the techniques that I use, there's one technique that I've developed. It's based on Richard Arm's Trin Index. Has absolutely nothing to do, I think, nothing to do with the way Richard Arms reads his and uses his index. I have a very simple way of using it. When prices go above a certain level, I immediately say that within 1 to 2 sessions, there should be a very powerful rally in the E-minis. Now, sometimes that rally can come from lower down, but you've got to be prepared for it rather than just going down and then down and then down with no rallies. This tells you that there could be 7 to 9 points at least in the E-minis, and how they translate into the cash index is really important. Okay, that's number one. When it goes down below a certain level, I have the Chapman wave Trin gauge flashes a signal as well. And that says, completely different signal. It says the very next day, there should be a rug pull in the Dow. It's only in the Dow that I use this particular index for when the Trin is very low. And it says that within one session, and usually it's the morning, the very next morning. What's wonderful about this indicator, it gives you a forewarning to say, hey, if you were going to do some buying, you might have a better opportunity, and usually it occurs when the market's quite high. It tells you that you'll have a better opportunity to do buying, if you want to do any buying, the following session, early in the morning. So that's just a hint. So what's happened here, and this is very important, is that the 19.80 high that was made on the 30th, 29th or 30th, on the 30th of June, hasn't been taken out. With all the selling, even with the Dow going to a lower low, it couldn't take it out. 1974, 76 have been the two highs since then. That's not good. That's just saying that there's still buying pressure available. So as I see it right now, 768, 67, I can't even remember what I said. What did I say? I was trying to type that in. 76. All right, there it is. Don't invert it. It's 76. 76. And let's make it yellow. No, make it gray because it didn't take out the previous one. There it is. All right. So here we are. So the VIX index is now stuck in a trading range that allows the market to rally more. And because of it, it says that even if there's a higher close, there could be a little bit of a dip early tomorrow morning. And that's what you got to do. That's all it says. But it's a great indicator. It does have a very high success rate, but we haven't seen, when was the last time we saw a very low trend? Wow, all the way back on the 20th of March. And the next day, there was, in fact, a dip in the Dow. So, all right. Now what we're looking at is we'll go on, and we're going to talk a little bit about the numbers. So I'll do the numbers as we move on. So the Dow has 70,733. Is it 33? Right there. It's just being covered, so give me a second. Yeah, 70,723. That's very strong 9-period exponential moving average resistance. And if it takes out today's high, that'll be very positive and say we should rally another day and a half at least, or at least another day. Maybe Sunday night, other things happen with the Greece situation, and Monday we come in, anything can happen. But in the meantime, back at the ranch, a close below 17,500 2 out of 3 times in the next week or so would suggest that that weekly chart is going from a sell signal to a sell mode. I'll have to see what happens tomorrow. I might even call this a sell mode tomorrow at the close. I don't know. I just got to hold back and have patience because the weekly candle has to close before you can make a decision. But we already hit that circle that I put in a long time ago as a target area. Now, what's important about this, I am calling it a counter trend rally. I am calling it a counter trend rally, meaning that in my weekly chart, perhaps the monthly chart, I have to wait all the month of July before I can get that reading. There's going to be a change of trend. But the change of trend is in the 120-minute chart and the daily, which says shorter term, we're in a sell mode. We're at a sell signal in the weekly chart of the Dow and the S&P. Let me show what I mean. SPX.X. The S&P daily has gone to the 200-period exponential moving average, has managed to bounce. It hasn't broken above the 9-period moving average of 2073. 2079 is very strong resistance after that. Meantime, back at the ranch, there is a chance that buyers are going to be forced in right now because you've halted the Chinese have done this with their stock market. They've said they've closed, I think 50% of the stocks or something like that. And the ones that are open, they're saying any investor who has more than, I think, 5% cannot sell the stock. Can you believe it? Can you imagine what would happen here? Well, you cannot sell the stock. That's what they said. So I've drawn in the arch formation in the weekly chart that says the FXI, the iShares China Large Cap ETF, could rally. I don't know if it can even get there, but this is the pattern that I'm looking at. And it suggests strongly that the 43 to 44s, and it's trading at 41.19 right now, 223, that's going to be very strong resistance. And then I suspect we get an arch formation there, starting in the daily. Okay? And China had such a steep decline. They could rally for 3 days easily, 3 to 4 days. So that's that. And then the DJ Shanghai, Dow Jones Shanghai Index, has a slightly different pattern. It's under the 9 EMA, and I've drawn an arch there, and that's at 480. And this could go all the way to 491s. If it breaks that, you can even go to the 512 area where the 9-period moving average is, make an arch formation and do a retest. Okay, now let's go on with our stuff. IWM, up $1.31. I suspect it's going to try to rally to the 9 EMA at 124.21. Any failure of any of these stocks to go even halfway below the low of the day, the close yesterday and the high of today would be very negative. But in the meantime, already an oversold bounce is needed. It's there. Same as a consolidation is needed in the market. It is absolutely after 6.25 years is what you can expect. So the IWM at 123.25 could have another point to go, and then maybe a point and a half, and then it hits a very strong resistance. QQQ series, same thing. 107.71 is the resistance to 108.09, and it's trading at 107.29, up $1.20. The weekly chart's a little bit better than the others, not technically, but only on price. Technically, it says this is going to go down at some point. It'll wake up. It hasn't looked down to see the technicals just yet. It's still up there in price. So that's that. Gold, GC, right now is down $1.21. It was up, hit the 9-period moving average of 1166. Now it's pulling back, and it's just stuck in a trading range. I just don't see very much for gold. Stuck in a trading range, making the arch formation. High-grade copper, nice bounce. Now it's pulling back, also stuck in the arch formation. They're all over this arch formation. Crude oil, can't even bounce. Crude oil looks really terrible. And now you've got bonds, TLT, made a PP, pulls back, hit exactly that Chapman wave inside wedge resistance, the pink line. Look right there. That line goes right there. And it suggests that for the TLT to for bond yields to continue going down, the TLT needs to, it's at 120 right now. No, I'm sorry, 118.70 down $1.60, 120 to 122.15. That whole area is going to be the big test, because if at any point in July the TLT breaks above it and goes to the 124s, that Japanization of our bond yields is absolutely active. This is a very critical period, and you've got a potential 120.57, 120.49 peak E pullback in the 120-minute chart. But that 200-period exponential moving average, that coral-colored thick line right there, which was resistance, that is holding. And this says there could be, I could even put it in right now, there could be a sideways trading range for now in the TLT as this counter trend rally continues, and that would say 117.50 to 117.20 should be good support. If it takes that out, then yields will be going higher. But that's the way I'm looking at it. And the dollar index, let's see the dollar index. I'm a little behind, but the dollar index is 96.49, up 19 cents. Is trying to make, in the 120-minute chart, it's trying to make some kind of a cup formation. And if the dollar is able to break into the 90, it's at 96.49. Move this away. It actually, to be just straightforward about this, no fuzziness whatsoever, unless the dollar is able to clear the high of 97.24 decisively. That was the high it was made in the 7th. It needs to not just take it out, it needs to pierce it, so that it's tackling the 97.78 high of the 27th of May and just takes it out. If the dollar has that kind of strength in the next 3 to 5 sessions, not only will gold pull back even sharper, but the dollar will strengthen the weekly chart and then the monthly chart. So this is probably one second to that major rally where the dollar went all the way to 100 before pulling back to 93. This is the consolidation phase, making the 98.30s, 98.50s very important, because it says that you can retackle the top, and if you go 1 penny above 100.39 in this dollar index, it starts leg C in the monthly. That's very bullish. And if it breaks down, a close under 93 in the next 2 weeks would be very negative for the dollar, in the sense that it would suggest that the consolidation is going to be deeper and the euro would finally have a bit of a rally. Just make it real clear. Okay, so now I'm going to go to the VIX index, make it clear there as well. Pulling back a little bit to 17.99, down $1.66. I'm still suggesting there's enough strength for the. I wouldn't be surprised if the VIX index pulls back to the 1650s, 1638 area, and then starts to move to the upside. But first, it consolidates this huge gain that it had. But if it does it tomorrow, then all of a sudden you've got this darn weekly chart fooling everyone all the time, because it hasn't been able to hold for 2 consecutive bars above the 200-period exponential moving average since October of last year. Isn't that interesting? All right, Basil Chapman, Tiger Technicians Hour, 877-927-6648. Love to get some calls. I'm going to do a bunch of stocks when we get back. And the Dow is up 180 on this 9th day of July, and the S&P is up 21. I'll be right back after these important messages.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative market-safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year market-safe power metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in 1 index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. So this is what I want you to show you just real quickly. Here's the 10-minute with technicals, the E-mini, S&P E-mini, and I've drawn the arch formation, and I've drawn the V formation. We've taken out on the right side the V formation. So that says you can go up now, but it's not going to be an exact V in time because it's this is redundant. So I take it out. And it says right here in the naked chart on the right over here. Oh, and the MACD is very positive as it starts to climb, but you need the price to climb as well, because if it starts to come, if the price starts to slow down and then turn down and go below 2055, you're going to see the MACD deflect lower as the stochastic only at 46 starts to go lower. So far, little stair-step move. It's really important you make your leg be over there above 20, 62.75. Worth watching. Look at this. I'll expand this chart, the naked chart right here. I say naked only in that we don't have the technicals. I draw in all these different patterns and the notation. So, okay, we'll come back to that. Out of there, onto a question I had, and then I've got questions. I've got stocks that we want to look at in the den that we've lined up. Hi, Basil. Can you look at Treasury bond and note volume? If the Chinese started dumping their massive U.S. bond and note holdings, the Federal Reserve in concert with Treasury would shut down trading. Any huge bond sell-off could also be built into the interest rate swaps market, which is where it would appear first. Some currencies moved enough today to trigger circuit breakers. All currencies are denominated in bonds. And this is July the 8th, so this was yesterday, just after the close. This is a great. Great observations, Warren. And I just, all I can say is some of it is out of my purview in that, yeah, I could look it up and all that, but it's not part of my vernacular to be talking about. See, if I, let me move away from here. Let me just show you something. JNK. So this is the junk bond has found support at 37.92. If ever there was a chance to bounce, it's got to do it right here, because if it takes out the 37 support, it's going lower. That's the junk bond. That's more the experimental. That's the part of bonds that I wouldn't say the cowboys, because they're cowboys to us, but they know their professions. But the real pros are using the junk GNK, Spider Barclays High Yield Bond Fund. So that says that the yields at this particular point so far are not moving much higher in the junk bonds. But if we go to the T bond, if I go to the TYX, and I've got this particular chart up right now, because this shows you in the Chapman wave methodology where the support levels are very much like John Logan's, not quite as sophisticated as his, but it shows the 120-minute chart. It's at 30.61, up 75 cents. This is the yield. But 29.78 is the support. That's what it held. 31.12 is a very strong resistance. In the 120-minute chart, 32.76, all the way up there. You've got a whole bunch. You don't have to get there, but look at the bunch of resistance points that were hit, which allowed the bond yields to come down again. So just using that, all I'm going to do is some of the technicals. I'm not going to do it based on volume, because it's really not. I look at volume, but in many different ways. On balance, volume is really important in my work, but volume is really the vernacular of some of our other hosts that we have here at TFNN. So now a question about the Federal Reserve and constant dumping. You know, when things are going to change, dumping is absolutely going to be the norm. As you could have seen, the short covering this morning, which it was short covering, and that second down move yesterday scared the bajillies out of all big traders, because I don't think they expected that second burst of energy to the downside yesterday. So when you see that, you've got to be real careful. So I'll answer that, but I'll tell you what I will do. I'll get rid of this right now, close the workspace, and I'm going to go to the yield chart, and I'll show you what I am looking at, which I think, for me, has the greatest relevance because it pertains to chart patterns, and patterns repeat like I always say. See, this is very important. This peak E that's being formed here in the weekly chart of bonds says we still have room to go on the downside for yields. That's the way I'm looking at it. Could be completely wrong, but the pattern suggests, just like those Ds, all those Ds, so all the Es had very sharp declines, and I'm expecting that this one will have a sharp decline if the yield, which is trading right now at 30.58, can take out 29.30. A close below 29.30 on the weekly basis says that the yields are going to go lower and bonds will go higher. So now as far as currencies, I spoke about currencies. Tomorrow's Technical Friday. Maybe I'll just spend quite a bit of time looking at all the different currencies, but I can't answer you other than the chart formations and make it real clear. At 34.20 in the yield, things have changed dramatically, and yields are going much higher and bonds are going much lower. Jim in Pittsburgh. Hi, Jim. How are you?
Oh, good morning, Basil. Nice to talk to you, sir.
Yes. You'd like to look at?
You know, I was, with the big sell-off in Chinese stocks, I was looking at the FXI.
Yes.
And I was just playing with some Fibonacci numbers, and a couple interesting things I came across.
So we've got a break coming up. I'm getting my FXI chart up right now.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. Look at this, the E-minis. So for those of you who are trading, remember we spoke about the arch formation of the V, and I see it's used up too much time for the V. There's that arch formation. Any notation here would say this is an A, which could go to an A minus if it pulls back at 2057. It goes to 256. I'll change that to an A minus. And that's that pattern. Human nature never changes. You make arches, you make V's, and you make straight lines, and that's it. Let's go to our caller. We've got Jim in Pittsburgh, and we're looking at FXI trading at 41.09, up 215, 213. Yes, fire away, Jim. You're saying?
Yeah, Basil, it's amazing, these Fibonacci patterns, how they play out over and over again in the markets. And if you look at the FXI chart, if you go back to the high made in October of 07.
Are we looking at the daily chart?
No, I'm looking at a monthly chart.
Oh, great. Okay, very good.
And if you go back to the high made in October of 2007.
Yep.
$73.19.
Of 2007, did you say?
Yeah, October.
I've got 72.26 as the high.
Oh, I have a 73.19 on my data.
All right, doesn't matter. That was a peak F in the Chapman wave. Yep. So what? Oh, look at that. There was a 1-to-1 expansion in the monthly chart down to the low of 19.35 on October.
And that's what I have, 1935 as well.
Right. Okay. Good.
So if you take a 38% retracement off of that.
Yep.
Now I was using the 73.19 figure that my data
That's fine. So just a few cents. So if it's not a big deal, okay.
So that gives me a 38.2% retracement at $39.92.
Yep.
Now, if you take that low in October of 2008 of $19.35,
Yes.
and you take the high in April of this year of $52.85,
Yes.
a 38.2% retracement off of that would be $40.05.
Huh.
13 cents apart. 13 cents apart.
Wow,
And
look at that.
And it's funny that the market went $1 below that yesterday,
Right.
and then it gapped up $1 above that today. So it's on both sides. It's on both sides of that 38.2% retracement.
So now, you know what I love? I was speaking earlier when I was at, I think it was with Larry when I was doing Tom's show. Folks, don't forget, tomorrow with Larry at 9:30 tomorrow morning, he's got a guest. He's got a guest that should be absolutely fascinating. And so he shows at 9 o'clock. And that's, let's say, 9 o'clock on Friday. And at 9:30, he's inviting this guest on, and should be really interesting show. And he called in just to remind me about it, and I recommend you go. But I wanted to say, a robust system will use other techniques to confirm. And lo and behold, my 200-period exponential moving average is at 39.78. Isn't that nice, huh? So, Jim, you still there?
Yeah, I'm still here, Basil. Hey, the other thing that's kind of interesting about this chart is if you take that high back in October 07
Yep.
to the low in October of 08,
Yes.
the high that we reached in April of $52.85
Yep.
was within a quarter of being a 61.8% retracement.
Oh, isn't that interesting? Huh.
So you had a 61.8% retracement, which then pulled back to 38.2 from both the longer term and the shorter term.
Oh,
Pretty
and look
crazy.
at this. The 238% retracement gives you 5180, and it was 1 point higher than that. Very interesting. This is from, if I do my Fibonacci expansion from the 1935 October 2008 low, that comes right there. And there's that, right there's that 238% retracement. This is very interesting. So so your conclusion is?
I actually think that this might be a support area, that we might get a decent bounce from here.
So, okay, now let's just talk to that issue right now. When we are talking about support and bounce, it means that within the context, at least for me, of this tidal change, what we're looking at is a counter trend rally. So I don't think that we're looking at a move in the FXI and the China index after this particular down, this massive waterfall cascade in the weekly chart. I don't think that we can be looking at it and saying we're going back to the highs. What I do say, and I've drawn it, right, and what I've drawn in here is some kind of a rally to the 9-period exponential moving average of 44, somewhere in the 44s, is a possibility, but a lot will depend on how we come out early next week. This is like when you dive, when you're surfing, body surfing, and you start off in the wave, you don't know really if you're going to pick up exactly, you've timed it perfectly, until a little after the wave gets going, because sometimes it swallows you up, sometimes it pushes you out, and sometimes you just sit beautifully. And that's exactly what we're looking at here, that if this is a counter trend rally of substance, then we can go a week and a half, 2 weeks, maybe even 3 weeks on the upside. If it's just a bounce, the refrain I have is if you drop a tennis ball on the hard court, you should have a decent bounce. If you drop it on a grass court, it's going to have a smaller bounce. If that is just a plastic bag with water, it's going to have no bounce, or it's just going to go plop. Now, what we're looking at is what kind, and if you throw the ball down, it'll go higher than your hand. I see no evidence at all that the China iShares China Large Cap ETF has enough momentum anywhere to say that we're throwing the ball down real hard, that there's going to be a V-shaped bounce that's going to take it to the 48s by August, and that it'll be back at the all-time highs by September, October. Instead, what I see is time and price to the sideways to down at this particular point, and this is just a bounce, and we won't know the extent of the bounce until early next week. That's just my initial analysis. But yeah, I do
thank
think
you, Basil. I appreciate it.
That's a good observation and tremendous assessment of your Fibonacci's. Thank you so much, Jim. I appreciate that.
Basil. Have a great day, Basil.
You too. That was Jim in Pittsburgh. So what I wanted to do quickly is there was a stock that was mentioned in the den, Anet. It's Arista Networks, ANET, 78.56 up $1.07. Now it's made almost a 1-to-1. The A to B equals C to D. It's made a trough B on the downside from the weekly high. Silent Chapman wave, silent doji goes to the next bar, 88.56 high on the 24th of June, comes down sharply. But the weekly chart has this cup formation, and it's an IPO that made a peak A and now has had a complete retracement with a brand new move to leg B within that. So the cup formation I'm looking at says, if you were long, I'd be real careful if it took out 76 as support. If you're not, and you are looking at, and all of a sudden, it should have done better today. But if it, by Tuesday of next week, if it's 78.56, if it takes out 80.70 above the 9-period moving average, I say, great. It has a chance now to make a leg D in this move. But the way I'm looking at it now with the market conditions, with the MACD, the stochastic and the daily and the weekly, I would suggest you just be, I'd rather give you the parameters to look for a breakdown, because a breakout is going to be really simple. If you are long and it takes out the low of 76.62, the low of 3 days ago, I just say be careful, but definitely in the 75s, I'd take something off. I wouldn't be hanging around. But most importantly, if it manages to survive the next few days of whatever happens, but by Tuesday or Wednesday of next week, it's trading in the 81s, this stock can go to a D. That's the only way I would look at it. My bias right now is just to say, be careful. I wouldn't buy it right now, but if you are long, that's what I'd be looking at. The next one we got was WWE. Weight Watchers used to be, World Wrestling used to be WWW, I think. Anyway, World Wrestling, I used to have notated. Now, there's the pattern I was talking about. You see this weekly chart. This is almost as if news, bad news, market news, I don't care. I've got my own patterns that I'm dealing with. So the daily is gone, a weekly is gone A, B, C, D, E, pulls back sharply, lower low. Sharp move, A, B, pulls back, makes a cup formation, trying to get to the C. I like WWE. Out of the stocks that we're looking at right now, this is the one that says, you know what, I'll make it real easy. Would I buy it at 16.77? You know what? I would nibble on it if I was watching the market closely. I wouldn't do it and go off to work. But if I'm watching it fairly closely, I'd buy it at 16.77, a small position. If by Tuesday it is not broken under 16.31, but is in fact near close to 17, I would add a second position, and that would have a real tight stop. My first one would have a stop of a point just to start with. The moment it can get to, if it can get to 16.80, I would say, great. 1680 says that it's doing kind of what we want. It's bounced off the 200-period moving average in the 120-minute chart. It's looking quite good. I would definitely nibble. I wouldn't put a 1-point stop. I'd have it a 0.80 stop. And if it got to the 1695 area, I'd raise that to 16, you're at 1672. I'd raise it to 1620-ish, and then I would add a little bit more, thinking that it could retest the high of 1780 that was made on the 25th. If it breaks that, that'll be very good. And I would, as I say, I would add just a little bit more if it breaks 1708, just so I've got two small positions. Right now, I don't think it's a good idea to have heavy long positions at all. So, okay, so that's the WWE, World Wrestling Enterprise A shares. Next one was RTH. Now, this is an important one to look at because the RTH has gone sideways. This is the retail, the market vectors retail ETF. So instead of breaking down, which I was thinking it was going to do, it's not gone up very much, but it has gone sideways to a trough D, A, B. This is very interesting. Would I buy it? No, I'd only use this as a technical indicator. I have no intention of buying the RTH because I think it's kind of done. I think when it does break down to 76.01, up 74 cents. They used to have an ETF that shorted it, but it's gone up so much they scrapped it. I can't find it anywhere. I've looked everywhere. They just don't have it. So this is Walmart, Home Depot, Amazon, CVS, Lowe's, Costco, McKesson, Target, TJX. It just goes on and on and on. Ross Stores, BBY, Staples, Kohl's. It's just it has everything. So this is the one that I'm looking at. Monthly chart has held well. So far, the weekly chart is held in a sideways trading band, but it is making lower lows and lower highs. If this doesn't take out 78 this coming week, it's a 76.01. If it doesn't, but instead it starts to test 74.50, break 74.50, and then break 74 support, it is done. Then the downside will start to accelerate. So I'm looking at the RTH as a potential short at some point, and that goes with the XRT. The one is the market vectors retail index, and the other is the Spider S&P retail. Same kind of pattern, and there again, 99.36 up 66 cents. Just a sideways range, but I can just tell you this: that if it breaks the low of this week, 97.52. The next support is 96.23. Breaks 96.23 anytime in July. It doesn't even have to close. Just has to go under it. To me, that confirms the weak technicals. Even in the monthly chart, the technicals have become. I'm not sure why it's holding so well. Maybe because there's still cheap money around. I'm not sure. But that's the way I'm looking at it. This is the one that's the most suspect. But if it keeps holding sideways, it can go on. A sideways pattern, a rectangle pattern, a rectangle formation can last a lot longer than your patience. That's my expression. And I'm gonna stick with it. XRT, I did XRT, FEYE, I did that yesterday. And where is it today? Nice move. Can't remember what I said. I know that when we looked at it, it was just starting to move. And I got a feeling what I said was, you can nibble on it, but you got to put in a tight stop because it has made a peak D in the monthly, but in the weekly, but the monthly is still at C, meaning it should still go to a D. But the sector itself, FireEye, cybersecurity, FEY, trading at 49.56 up 2, wasn't looking that great. Now it's looking way better. So if you're long, I hope in the den, I can't remember who asked me that. Was that J and J? Well, if it was, yeah. Nice. You've got a great move here. Just raise your stop. Let the stock tell you from now on. There's nothing. You don't have to overthink this. It's at 49.58. If you got in yesterday, the high was 48.60. You must have got in somewhere around 47.90-ish. Just make your stop, your entry price. And if it goes $1 higher from here over the next 2 days, use a trading stop of 2 points. That's the best way. Cyber's the next one, CYBR. Cyber is same thing. Coming off the 200-period moving average. I think this is a bounce. In fact, I should have done it with the other. I'm going to just draw this in. There it is. I think it's a 61. Has a chance to go to between 63 and 64.20. And then we've got to be real careful. So if you are long, if you went long, just make a fairly tight stop. This still has to make a D in the monthly. I'm not sure it's going to be able to do it now because it's got a D in the weekly already. And that says 63.60s is the 9-period exponential moving average that you got to watch closely. So just hang on. Don't overthink. Just put in your stop and let the market tell you. And there was one more that I was looking at. PANW. This is a Massachusetts company called, I can never remember what it's called. Oh, Palo Alto Networks. How can it be Massachusetts if it's Palo Alto? Anyway, hey, this is a different chart altogether. We'll be back. We'll talk about PANW, Palo Alto Networks at 170.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Hi, folks, we're back. So I just want to quickly show that chart. Remember the 10-minute chart? Now, Daryl Martin comes up next. Daryl's fantastic show. He uses these 10-minute charts with these different boundary points, and it's fabulous the way it works. I keep it with the Chapman wave notation. I try to keep it as simple as possible. There's that arch formation. There's a chance that if it holds well, it can make a cup formation. The day is young, we'll see. But if it takes out decisively 2053.75, let's say if it takes out 2052.75, that'll suggest you got to be careful, because it could be a 1-to-1 to the downside to the 2050 area very quickly. So this is very important. See that yellow horizontal line? That's been the fulcrum all the way through. So it's a fulcrum once again right here. All right, let's get out of this and we go back to our charts that we were looking at. So PANW, Palo Alto Networks, trading at 175.34 up 286. A little bit better pattern because it never came down far. There's that H pattern, the very pattern I was talking about. Look, there's the H. There was a break under it. And if the technical start to improve, instead of failing, it could give you a brand new buy signal. Well, it did fail. and the technicals are okay. So the technical is going to have to, at 31%, that is good instead of 20% in the stochastic. If the stochastic is able to get to 33%, as this thing goes to 176.50, that's going to suggest the MACD could finally turn up. There's a little bit better pattern. Also, the monthly chart is just spectacular. And the weekly chart, walking the 9 EMA, has 170, let's call it 170 key support. So far, it's holding well. Out of the bouncers, this is the one that has the weekly as still in a very strong up mode. That will change at some point in July if PANW takes out 165 support. Trades in the 164 or lower area, it's in real trouble. No, I shouldn't say it's in real trouble. It'll be the first time that it's broken under the 9-period exponential moving average for a potential close in the weekly chart, and that'll be the first close under since it broke out back in May of 2014. Wow, over a year and a month, 13 months, 14 months, unbelievable. And it hasn't broken under. I think it might. This particular move could take it down below. But as a trade, this one looks good. If it takes out 178.28 on a closing basis, that'll say, hey, I can now try for 179.80 to 180.50. At that point, I think it'll just run out of steam. So there we are. All right. So let's do this. We're about to wrap up and go to Daryl Martin. Got program all the way through today. And please stay tuned. So let's just do this. Oh, check out my opening call. We've had some fabulous trades, really big 25, 20% winners, 30%. So one option, I did take it off today. I just didn't want to mess around because it was a little bit under a break-even trade. When you go through it, maybe just a 10 cent, or maybe an 8 cent loss, 10 cent. I'm not sure. I haven't had a chance to check it out because I've been on air all the time. But I'm probably going back next week into that same trade. But the reason I got out is that the premium on the puts, we've had this for a while, the calls and the puts really start to shrink and change comes Monday morning at 11 o'clock. The last week. This is a monthly expiration, but that next week is the expiration. So I just didn't want to be vulnerable trying to figure out what to do. We'll have a beautiful trade if I get everything in place. We'll see what happens for Friday a week close. Okay, let's just do this. So the VIX index, once again, I'll spend a little time on the VIX because why? The VIX is going to be so important on the close tomorrow. Today is the lead-in. It's at 1835. If there is a rally late today or tomorrow, and you see this VIX suddenly close under or start to move into the 16s, and Friday it closes at 1680 or 1640, that's just going to suggest once again, yes, it's above the 9-period 200-period moving average in the weekly, but it's going to suggest that there could be a little more upside in the market into early next week. The moment the VIX starts to trade in the 21 to 22 area, watch out below. This market starts to really slide. Make it as simple as you can, folks. That's my outlook. And I'll be back tomorrow. Have a great day. Thank you for being.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.